Okay, everybody, welcome to This Week in Startups for a Friday. It's a solo dolo, Jason Newsday. I'm back to going solo because Molly has a well-earned vacation. We're going to do a full Coinbase breakdown ahead of their earnings report. Next week, we'll also cover that, but we're going to talk about their stock having a massive comeback and this new partnership they have with BlackRock for institutional trading. Just when you thought crypto was over, it looks like Coinbase is making some progress. Then we're going to cover another Amazon acquisition. Amazon is now buying Roomba-maker iRobot, and we'll go through some of the other acquisitions that Amazon has made and some of the ones I think they should make. Then finally, we'll wrap up with the debut of jtrading.com. Yes, I have a domain name. We bought the domain name jtrading.com, and we're breaking down the early trades I made and one of my 4 trades. Stitch Fix, Amazon, Disney, and Warner Bros. Discovery. One of those 4 is down 17%. I'm getting slaughtered by this trade. And we're going to find out if I'm going to double down, stay the course, or I'm going to make my first sale. And then, of course, it's Friday, so you get another amazing OK Boomer segment from Rachel reporting. It's going to be a great show. Stick with us.
This Week in Startups is brought to you by Lemon.io. Need to speed up your product development without draining your budget? Hire vetted engineers from Europe at Lemon.io. Go to lemon.io/twist to get 15% off for the first 4 weeks. Helpware helps you outsource the tasks that slow your team down. From data entry to world-class customer support, Helpware can help make you bionic. Go to helpware.com/twist to get $1,000 off your first invoice. And Bubbles. Guess what? You don't have to be in back-to-back calls all day or get continually pulled into quick syncs. By using Bubbles' async collaboration tool, you can remove a minimum of 2 meetings a week from your schedule. Get your point across with unlimited screen and video recordings for free at usebubbles.com/twist.
All right, everybody, in our first story, BlackRock is partnering with Coinbase to make it easier for institutional investors to manage and trade Bitcoin. Apparently, people still believe in crypto and people love Bitcoin. It's amazing to see Bitcoin be the one cryptocurrency that seems to weather every storm. And we're going to cover a little bit more about Coinbase's performance because they're going to have their quarterly earnings report next week when markets close on Tuesday. So today's Friday. On Tuesday, next week, today's the 5th, 6th, 7th, 8th, 9th. On the 9th, Tuesday, Coinbase will report their earnings. I'm really interested in seeing what happens with those earnings because who's trading crypto right now, right? I mean, who would trade into this? If anything, people are selling or don't want to open the app and look at it, right? This is what Robinhood and Coinbase, their big challenge will be in a down market when people don't have stimmy checks, when they don't have free time, when they can now go back and spend their money going out or wagering on sports. All that stuff is back online. You're going to lose, I don't know, 25, maybe 50% of the looky-loos, the people who are trying out trading as a pastime, or maybe they just were greedy and or had FOMO. Any of those things are possible. And now they can have other pursuits because the pandemic is over. Isn't that amazing? We don't think about the pandemic all that much anymore, but there was that year when we were locked inside and couldn't go out and you had to wear masks and all this crazy stuff that we went through. Thank God it's over. And then on Wednesday, I'm going to have my friend Sunny Madra on to talk about crypto because he's deep in the weeds on it. He's building a crypto startup. He's been in it from the beginning. And I'm looking for one more person to have on. A lot of people are away for the summer. So if you have suggestions of somebody who's actually trading and buying crypto right now, that would be interesting for me. You can email producers at thisweekinstartups.com. So as we know, the SEC is investigating Coinbase over selling unregulated securities on its platform. And I think I didn't cover that because I was out on my rafting trip, but Molly and I think Deirdre Bosa did talk about that. Now let's just quickly go through what's going on here. Coinbase has had a crazy ride since they went public via a direct listing in April of 2021. They didn't do the standard, IPO roadshow tour. They did a direct listing. And when you look at this chart, my Lord, it was at $77 billion as a market cap. You're talking Airbnb levels, bigger than Uber today, but, kind of Uber at its peak. Now this is with a lot of crypto mania going on in November of 2021. And of course, it's plummeted since then. And this is the really hard part about being a public market investor or a private market investor for that matter, in a really hyped up market. If you were a VC, if you invested in Coinbase, my Lord, you should have distributed all the shares. And, since they, unlike say Robinhood, where I was locked up and the shares were really high during the lockup, and then they came down after we were all unlocked. Private investors typically have a 6-month lockup. Coinbase, because it was a direct listing, you don't have a lockup. The shares just start trading. Spotify did this as well. Bill Gurley has been a proponent of this because the fees are lower and you get to the organic price of the stock almost immediately, or theoretically you do immediately. So they could have distributed at these crazy market caps and then took that win. And man, they should have. So this is one of the big lessons I'm trying to understand with jtrading.com, TM. I am trading stocks here because I want to be really good at knowing when to liquidate, when things are overvalued, when they're undervalued. And so that I can use that to inform my private market investing, to inform my liquidation and cashing in my chips before an IPO, after an IPO, and when should I liquidate as an early stage investor? And then when should I hold, right? And look, if I had bought a ton of Uber when it was at, $19, $20 just a couple of weeks ago, I would have had a 50% gain. That's nothing to sneeze at, right? But maybe you held on to them and, now you could be looking at, the destruction of, 80% of your returns. 86%, I think, was peak to trough, bottomed out at a $10.9 billion market cap 8 months later in July of 2022. We're sitting here on August 5th, so just last month. But over the past 5 days, miraculously, Coinbase's market cap is up 50% from about 14 billion to 20 billion. Now, this is very misleading because when you lose 86% of your stock, right, it's going back up 50%. That doesn't get you, to close to 86% because remember, you have to grow a lot more. So if you were to go from down 86%, you don't just need to go up 86% to be even again, right? 86% on 14 billion, you'd be at 24 billion or something, right? You're not going to be anywhere near that peak. And that's just fun with percentages, right? Because the percentage decrease is from the high number, the percentage increase is from the low number. This should be obvious to everybody. But this is why holding on when you're in a dog of a stock is a really hard thing for people to do because catching up can almost seem insurmountable. But this is very interesting. People who are bottom feeding right now, I started J trading at the beginning of July, almost will be at a month, I think, since my first trade. And because I believe, and I said this in June, that we were bouncing along the bottom, and I thought the summer would be kind of a bottom moment, but that we might retest those bottoms over the next 6 to 12 months, which made it a perfect time, I think, to start J trading, start maybe looking at what the value is. I'm not saying Coinbase is one of these. Actually, I wouldn't touch Coinbase because I think cryptocurrency could be having what I would consider an existential crisis here because of these SEC investigations. But look at this chart. Coinbase's quarterly revenue ripped from 190 million in mid-2020 to a peak of 2.5 billion in Q4 2021. That is bonkers. But in Q1, revenue dropped 35% year over year to 1.1 billion. And I think this is all the retail traders are just gone. If you look year over year at this chart, it is a pretty crazy swing as a public company. When you're supposed to go public, when you have predictable revenues, right? That's what the public markets are for. People are looking to really understand your business. It should be robust and predictable. But I don't think people could predict, I did, but I don't think most people could predict that crypto would get hit this hard. I knew this was coming, only because I didn't think there was a fundamental intrinsic value in almost all of the cryptocurrency projects out there, not Coinbase, but the things that are traded on Coinbase. And I thought there was also a risk of regulatory issues, including and up to things being banned. And here we are. Coinbase had an issue with insider trading. People were front running the markets, and I believe it was the New York's Southern District, I think, went after those individuals. And now we have Coinbase reportedly being investigated by the SEC because they believe the coins being traded are stocks. I believe they're closer to stocks than they are to Chuck E. Cheese tokens or airline miles or utility tokens. So I think if we're being intellectually honest, just my belief, I know people disagree, certainly cryptocurrency exists somewhere between, Chuck E. Cheese tokens, these random tokens that allow you to do something, right? They have some utility. You can use them as airline miles. You could use them in a video game. And then there's stocks. People buy them to appreciate other people have control over them. There's this whole Howey test. And I guess we're having this debate. Do they exist as airline miles where they would be unregulated, or do they freely trade? And it's obvious they freely trade. Coinbase operates, and even Robinhood. All of these tokens are trading as if they were stocks. If you're trading them side by side in any of the apps, and I don't want to just single out Coinbase here, any of them, they trade just like stocks. Now, should the SEC have been more clear? Of course. But I think a lot of people also suspended disbelief in this regard, and it needs to be cleaned up. And the cleanup process, as we know, can be messy. I don't think this is existential for Coinbase at this point, but it's acute. I think it's a very acute situation. I don't think Coinbase is going away because some things like Bitcoin, with no ownership, no central control, Ethereum, those feel differently than these crypto projects, which I believe the tokens were a proxy for shares in the company. And I think people did that knowingly in most cases. Last quarter, its revenue growth was negative, down 35%. And live by the gun, die by the gun. It's pretty amazing to see this come apart. 9.2 monthly transacting users in Coinbase's last quarter. And that would be the number you really want to watch going into Q2, because that's when the market really got scary. It was scary in Q1. It was like really scary in Q2. Things were really, really down. And just Robinhood reported, I was an early angel investor in Robinhood. I was not a private market investor in Coinbase. But if we're being intellectually honest here, we saw Robinhood, which I think peaked at 21, maybe even 22 million monthly active users. They're down to 14 million. So, down a third maybe, or 25% at least. 1.1 billion in quarterly revenue last quarter for Coinbase, and that was down 35%. Loss of 430 million. They were very profitable in the 2021 quarters, right? People were buying up cryptocurrency. They were getting a VIG on everything, a little piece of the action. And supposedly they have around $6 billion in cash and equivalents, but they have $3.3 billion in debt. You net those two things out, they're sitting pretty on $2.8 billion. But the key stat, $235 billion of the $309 billion in trading volume on Coinbase was by institutional investors, about 76%. That was last quarter. What does this mean? Well, this relates to the BlackRock news. The people who are actually trading, not the trades, but the volume of the trades, right? In dollar amount. So you could have a lot of people trading, a fraction of a Bitcoin or a couple of Solanas here and there. That's different. It's very different than large chunks, $1 billion in Bitcoin, which we saw Tesla held, or $500 million, $250 million chunks. That is, I guess, Coinbase's speciality. And I think that's probably the future of the business. And that's why they've done, I think, or they'll continue to do cuts and resizing of the business to focus on institutional, because institutional does still seem to believe in this. 3/4 of the trading volume on Coinbase in Q1 was done by institutional investors as well. So that makes sense to me. People stopped speculating. The reopening happened. So not only is the volume institutional, but the trades has now flipped over to institutional. I'm sure last year, when you had just a lot of people at home trading, and certainly in 2020, second half, when people were, before they were getting vaccinated against COVID, sure, there was a lot of trading going on, I'm sure, by retail. So this always happens. Retail comes into the market, they become the bag holders, then they disappear. Institutionals come back, they buy when the market's down. Although I think with crypto, buying when the market's down could be the worst advice you ever get, because it could be down before they turn the lights off. Right? People forget the lowest a stock can go is 0. The lowest crypto can go is also 0. So I think many of these projects could circle around the drain and just stop trading. There just might not be any volume in them. And we have seen that actually with crypto projects, not the top ones, but I could see the bottom or the mid-tier ones, just there being no trading. And so if you own them, you essentially own some Beanie Babies or some, rock and roll t-shirts from the 80s that nobody wants to buy at this point in time. Who knows? Maybe someday people will want to trade crypto assets that are really old. Let me tell you a quick story. Drew Fabricant is the Launch Portfolio founder, and he runs a company called Scout. It's a lead gen platform. He's super talented, but he was recently under the gun to hire a developer with a very specific skill set. And Lemon.io delivered a great candidate quickly, and they were a pleasure to work with, according to Drew. Take it from me, hiring developers is hard. I see this all the time, founders struggling with it. And so many founders struggle with doing it quickly. Well, Lemon.io is going to help you hire better developers faster, just like they helped my portfolio company and friend Drew. They have a network of engineers from Europe and Latin America, and every candidate has been tested and interviewed by their team. That's how Lemon.io can make your engineering team bionic. No wasting time with unqualified candidates. That's one of the biggest problems. And easy access to global talent. They can get your developer up and running within a week. And of course, it's more affordable. So go to lemon.io/twist to get 15% off your first 4 weeks. That's 15% off your first 4 weeks at lemon.io/twist. BlackRock is obviously the largest asset manager in the world. They manage 10 trillion assets. And here's some quotes. BlackRock chose to partner with Coinbase because of its scale in the market and role in providing trading, custody services, prime brokerage, and reporting capabilities. The services will be available for clients and both companies. All this trading volume in Q2 was institutional investors, so it makes sense. BlackRock's focus of the partnership with Coinbase will initially be on Bitcoin, since that's the closest thing we have to digital gold, and people seem to want to hold it. It seems to be enduring. I mean, if you're BlackRock, do you really want to advise people to be buying the next 20 cryptocurrencies, XRPs, in a lawsuit with the SEC? Maybe the other ones are, in fact, securities, and the SEC is going to start, I would guess the SEC is going to start going after each of these individual crypto projects and making them pay fines, or start only allowing them to be traded amongst accredited investors. Now, I want to see accreditation open to everybody, but I do think if we're being, again, intellectually consistent, honest, and have a level playing field, if you want to trade in these cryptocurrencies, you should have to be, since they're not publicly registered, they should either get publicly registered or do all the legal work over again, or they should only sell to accredited investors. And they should be, those trades should be obviously done the way we trade shares in private companies, which is, there's a decent amount of friction. You don't just trade them like on a stock market. Why BlackRock is interested in this, I'm not certain. They seem like smart individuals. But in April, they joined a group of investors in Circle's USD coin. That's the Tether replacement, I think. Seems like Circle is doing reporting in the way I said Tether should do it, which is just put out your trades every day. Here's our holdings every day. So Circle is being very upfront about that. I think that's why, as a stable coin, they'll be the digital dollar for now until the US dollar is available on a blockchain or trading. So clearly BlackRock has something interesting here. My biggest holding now in J trading is Amazon. I think this company is firing on all cylinders. They're just excellence across the board. And here we go. Another acquisition. I've been saying, in a down market, if you got a lot of cash, there's going to be a lot of companies that might be available that previously weren't available, or the prices might be marked down. And so what do you do when things are on sale? Well, buy, as Jim Cramer would say. And I think Amazon is, with One Medical and other companies out there, going to buy stuff. I think they should buy Uber, and I'll just move my Uber shares into Amazon shares, since I love both these companies. But I mean, Uber's the natural home for Amazon in my mind. I don't know why Amazon just doesn't come in and buy Uber, Lyft, DoorDash, any of those. But I would, obviously, if they were going to do it, they should buy the leader. And for $100 billion, it would be pretty no-brainer deal for Amazon. Can you imagine what that would look like if all the Uber drivers could deliver Amazon from the fulfillment center in addition to what they're doing? And Uber Eats could be upsold, and your membership in Uber Eats or Uber One would be part of your Amazon Prime. I'm not sure if regulators would like this, but seems like a pretty good idea to me. So this is the fourth largest ever acquisition for Amazon. They're buying Roomba-maker iRobot. And people seem to be over the moon about Roombas. You will know a Roomba owner because they will tell you about their Roomba in the first 15 minutes of meeting them. They absolutely love this thing. Somebody gifted me one. I never set it up, so I got to go find it in the garage. But this is, like I said, their fourth largest, in dollar amount acquisition. Number one, Whole Foods, $13.7 billion. Fantastic. Number two, MGM, aka James Bond. They also own Rocky and RoboCop. $8.45 billion. And then One Medical recently, $3.9 billion. And these all have been in the past couple of years. So if I'm, Google, if I'm Apple, I'm watching what Amazon is doing and making these very strategic, I would say mid-tier. They're not huge acquisitions. Even $13.7 billion is not huge. There are $50 billion, $100 billion acquisitions that occur. As of 2020, iRobot had sold more than 30 million Roomba robotic vacuums in its history. Roomba sales make up 89% of its revenue. They also make robotic mops and pool cleaners. They have a subscription program. And, they also bought Ring. So I do think that Amazon likes hardware. They have a unique insight into what people buy because of their marketplace. They like automation. They like tech. And so makes total sense to me for them to buy something like this. This would be as if Apple was, more acquisitive. They might have bought Tesla when they had an opportunity to buy it for $50 billion, right? When it was a young company. They could have bought Ring themselves and had home automation. They should still buy Sonos and Peloton. There are all these modest acquisitions, 10 billion or less, that Apple could make, and they just don't do it. Its founding CEO, Colin Angle, is still at the company and will remain on board as the CEO post-acquisition, like they did with my friend Tony Hsieh, rest in peace, Mr. Tony. And they're keeping the CEO and company culture intact. That's consistent with their M&A strategy, as well with keeping Jamie Siminoff, another friend of mine, at Ring. So congratulations to Amazon. It makes me want to buy more shares. They also bought Kiva Systems back in 2012. Those are those warehouse and fulfillment robots. So I've always known that automation is big on Jeff Bezos's short list. He's always loved this stuff. And they're starting to do those drone deliveries. And it makes total sense. Amazon made a smaller move into home robotics with the launching of Astro, which is a household robot for home monitoring. $1,000 was the introductory price. And it basically like an Alexa on wheels that rolls around your house. This thing is brilliant. I want to get this. I didn't even know this was out. I literally want a little robot dog that goes around my house and checks everything. Amazing. So smart homes is a big part of what Amazon wants to do. Remember they had the little button? I forgot what they called it, but you could put in it was an IoT device. You could put it in your, let's say your laundry room, and it would say Tide on it. And you just press a button and it would order your Tide. Those little buttons, I don't think they exist anymore, but these are the kind of things that Amazon likes to play with and try things. And listen, they tried their own smartphone and tablets. I think the tablets are still available, Fire, but the phone isn't. They also crushed it with the Kindle. So one of the things I love about Amazon is they're not afraid to try really hard, ambitious things. And they're also not afraid to turn them off. Amazon's market cap peaked at 1.8 trillion in November. That was the top of the market, dropped 40% to 1 trillion in June. But since mid-June, stock is almost up 40%, 1.4 trillion. Will it reach its previous high? I would think so, and I made a big bet on it. When? Who knows? But it's just one of those great companies for the ages. You hear it all the time, but it's true. Time is money, and money helps keep your startup alive. That's why you need to check out Helpware. Helpware calls itself People as a Service. Basically, they are going to help you outsource the tasks that are slowing your company down, from mundane things like data entry, more complex tasks like world-class customer support and even AI operations. Here's an example. Imagine you're a product-focused startup executive and your schedule is perfectly optimized. At the start of your day, your tasks are scheduled, meetings are booked, Zoom links are sent. And all you have to do is show up and focus on what matters, the product. This is possible with a Helpware scheduling assistant. And Helpware is a worldwide operation. They have 13 global locations and they cover 26 languages. That will come in very handy when you start shipping your product in multiple languages and you need customer support. The bottom line is you're going to save tons of time and you're going to become bionic, and your startup will become bionic if you use Helpware. So here's what I want you to do. If you need to outsource, if you need to have support for your different departments, go to helpware.com/twist to get $1,000 off your first invoice. That's right. HELPWARE.com/twist for $1,000 off. Now, on a J Trading update, we can pull up jtrading.com and I'll show you the new website. I was able to get the domain name JTrading for, I think I paid $5,000 for it. Somebody was sitting on it. So last week I bought jtrading.com for $5,000. And this is going to become maybe its own podcast or show on CNBC or Bloomberg. I think if I get good at this and we're doing trades every week or every day, this would be a really interesting show that we could spin out. And we'll see if the audience really enjoys doing this with me. But I'm enjoying doing it because I want to become a world-class investor. And I will debut here the 0.1 of jtrading.com. I am going to list all my trades. And what you'll see here that I wrote on it, this is not investing advice, obviously. This is more for you to give me advice. That's my goal for J Trading. I have a 4-part goal here. Number 1, I want to become a world-class public market investor. What would define world-class? I beat, the indexes. Number 2, I want to find companies that'll be 5 times bigger in 10 years. I do believe Amazon could be 5 times bigger. Disney, Warner Brothers, and Stitch Fix. All of those believe could 5x in the next 10 years if they execute really well. That's my basic premise, is that there's a chance of that happening. And then I want to really combine my private market wisdom. I've been pretty good at identifying early stage startups and building positions in them over the last decade. I want to combine that with public. I've always been like, public is too hard. It's too complex. I don't have an edge. Well, I think I might be overthinking it. I'm doing this podcast every day, This Week in Startups, and All In every week. Everybody around me is really smart. And all the public companies I know were friends of mine or people I knew or had on this podcast when they were private. So what's the difference between them? Well, now I have more data. So I'm thinking about it. I'm like, well, maybe I could be good at this too because I really understand product. So that's my third goal. I really want to be able to take what I've learned in private markets and see if what of those lessons apply to public markets, right? And I talk about the lessons I've learned here: product manager matters, delighted customers, the product velocity. And so do those things still apply to public companies? I think they do. Operational excellence is something that matters dramatically in public markets. In private markets, operational excellence is important, but really product market fit and innovating is what's most important, right? Because you're up against these big, lumbering old companies. But when you get big, operational excellence matters. You have to be able to scale the business, as we saw Apple, Amazon, Google, Facebook, et cetera, have done. My belief is if I become an expert on public markets, that'll inform how I make private market investments. In other words, can I see this private company ever hitting the scale that would be necessary? Do the unit economics work? I was evaluating a company and I said, listen, based on what I'm seeing with Stitch Fix, based on what I'm seeing in public markets with clothing, why would anybody do this clothing startup? And it was like really eye-opening for me. And then I was like, yeah, and based upon the delivery and what I know about delivery from Uber and DoorDash, I don't own DoorDash, but I do own Uber. Based on what I know from delivery and the cost and the margin, I don't see this business as a marketplace because the delivery costs would be too high. There's too little at stake. And it was just a really great unlock for me. So that's really my third goal there is, can I take my private market wisdom and have it apply to publics? And what I learn in publics, could that apply down into the private markets? And it has already. And number 4, I just want to learn from the audience. My feeling is if I put these trades out here, you'll tell me if I made a mistake. And so going through the first 4 trades, Stitch Fix, Disney, Amazon, Warner Brothers, Discovery. Stitch Fix, and now if you were to go to the website, jtrading.com, and you click on Stitch Fix, and you open it up, you'll see I just wrote a little synopsis at the top. I'll do this for all of them, and I'm going to continue this discussion and writing on the website. And by the way, I'm using Notion, one of our sponsors here, to build this website. And so you see here, I wrote, I made my Stitch Fix trade based on my follow the insiders thesis. So I'm going to define my thesis. We haven't done a second follow the insiders yet. I am looking for other insiders buying shares. So if you know of somebody, that would be a good thing to tip me off to. Bill Gurley was the early investor that we saw do that. We made the J trade. Boom. That's been a great J trade for us. It's up. Let's go back. In fact, can I see? Does it show here what we're up? I think we're pulling live data here. So my average share price is $5.69. It's at $6.45. Oh, we're not calculating it. So we'll calculate where we're at. It was showing it earlier today. So I'm not sure why it's not showing it now, but we're up on that trade. about $1 per share, or just under. And so probably up $4,000 on that one. And Amazon we've got in at 131 average share price, and we're at 140 now. So we're up on that one as well. Disney, we bought at 103 and it's at 106. So we're doing great on that trade. And then the only whiff I've got so far is I bought Warner Brothers Discovery at $16.26. I bought 50 grand worth, 3,000 shares. It's the second biggest position because I believe in HBO. And it got walloped, lost 10%. So that's our next discussion here. So again, I'm not looking at this week to week. I mean, we will discuss it week to week, obviously. And I will be looking at it every day. But my goal is 10 years from now, can we see Stitch Fix be a $50 share price? Can we see Disney be a $500 share price? Amazon, can we see that being $650? And can we see Warner Brothers, at $80 a share, right? 5X is what I'm looking for. And so we'll just see if that journey happens. And if we don't think something is on that trajectory, intellectually, I want to be honest about maybe we move the money out of Warner Brothers and put it into Paramount or Disney or Netflix or whoever we think is going to beat each other. And so let's talk about this Warner Brothers. Yesterday on the show, we had Lon talking about some of their programming decisions around canceling the Batgirl film. That was a little quixotic and weird. But I did like what I heard from Zaslav. That's my guy, David Zaslav. He's a wartime CEO. I'm betting on him, and I'm betting on the brand, or brands, I should say plural. You need to have excellence in operations at scale. Warner Brothers has not had that. HBO has always had that. CNN has not had that. Trump gave him a huge bump. CNN Plus was an absolute disaster. And there's everything in between. Discovery has been an amazing business that Zaslav has run. The collection of and DC has been a complete disaster with moments of excellence, but a disaster when compared to Marvel, which was probably the greatest moving image startup ever created. If you just look at what they did over the decade, I mean, what a money printing machine. So here we go. Warner Brothers Discovery, which is a collection of HBO, Discovery, DC Comics, Warner Brothers, which owns The Matrix, etc. This conglomerate is a mess. $3.4 billion loss, $1 billion due to complications with the merger. But Q2 revenue, $9.8 billion, but a loss of $3.4 billion, as we're saying. But they got $3.8 billion in cash. They got $1 billion in debt. Total subscribers, 92.1 million subscribers. They expect 130 million global streaming subs by 2025. So that would put them behind, obviously, our friends at Netflix and Disney. One Bloomberg analyst said, "We knew it was going to be messy, but this was pretty awful." So right after I make the trade, I'm getting this kind of feedback. Warner Brothers Discovery previously said expects to slash $3 billion worth of costs over the next 2 years. So that's what Zaslav is doing. He's coming in. He's going to make this one service, HBO Discovery. So basically HBO Max plus Discovery. And then all that stuff, you pay one price. Boom. Easy peasy, lemon squeezy. You get everything. I am not dissuaded. I think this messiness is the opportunity. I have a pretty full position here at 50 dimes, but I think I'm going to put $1 million or $2 million into the J trading portfolio. And that means it would be either 2.5% or 5% of the portfolio. I think having 20 names would be probably good. So 20 names either at 50K or 100K each. I can keep that in my head. I think I can keep track of it. So we want to pick these great winners. This is my bet here. And it's not a feeler bet. I would say the feeler bets are those 10 to 25K bets where I'm just trying to get my attention focused on it. And so we can build a position over time. We might buy more shares of this. I'm tempted. But I think these streaming businesses are going to be juggernauts. I think Disney is the first that will get to $1 billion. And then it's going to be Netflix or HBO Max Discovery that will get to $1 billion after them. And so if you have 1 billion people paying $6 a month, I mean, $72 billion a year in revenue, these things really have not existed in the world. The analysts are split. We got some analysts saying they're going to keep their price targets. Other ones are cutting it. And the Bloomberg analyst says, I don't think they're going to be the number one streaming services. I agree. Disney's going to win that. And it could be Netflix's number 2. But she says, but that's okay. As long as they're able to make money. And that's, I think, my belief as well. I think there's going to be a 1, 2, and 3 here. I wouldn't discount Amazon. They'll probably be 3 or 4. And I think Disney's clearly going to be number one. So that means it's a race for number two. I think we already own the gold medal winner in Amazon. So do we want to own Netflix or do we want to own HBO, Max, Discovery, this Warner Brothers Discovery conglomerate? I think I'd rather own HBO Max. So that's my update on the J trade. If you have ideas for J trades, I'm going to try to do 2 a week on the show. And I'm looking for ideas of businesses you believe will be 5 times bigger. And we are looking at businesses that we believe in management. We see product velocity and we see delighted customers. So this is the lens I want you to thinking on. This is the exact lens I use for 2-person companies or 5-person companies. So I really want to see, put these 2 things together. And then there's one mitigating factor, which is the balance sheet. So in these public companies, we really need to be sensitive about the balance sheet. How much cash, how much debt, how much profit. And that really falls to the leadership. Is the leadership able to scale and run a business to be profitable? Whereas the thing I'm learning about the difference between private and public market investing is these operationally exceptional people who can scale these businesses, they don't have the brains to make killer product. The Tim Cooks are not making the iPhones. The Steve Jobs make the iPhones. And it's very rare you can find somebody who can do both. I think Elon falls into that. He can build a very big business. He can operate it, but he also is a product genius. Very hard to have both of those things, isn't it, right? I think Bezos falls into that category. Jobs fell into that category, rest in peace. But most people don't. Let's be honest, most people don't. And what's necessary to run a business at scale might be different than building great products. And some people can have both skills. Most people can have one, is my belief. And, I'm testing this thesis. If this is a sword, we want both sides of the blade to be sharp, okay? So this isn't like a one-sided sword. This is like a serious weapon. We want both sides to be equally sharp. I got a really sharp private market, and we're sharpening the public market one. Okay, let's have producer Rachel join us for OK Boomer. Listen, I want you to go to usebubbles.com/twist right now, download it, do a quick product demo, and then tweet it to me or email it to us at askjason@launch.co, and I will personally watch your product demo. And we might even put you on the show. Bubbles is an async collaboration tool that allows you to do teamwork on your own time. Bubbles helps you get your point across by creating a 3D conversation that includes screen, audio, and video. It is incredibly beautiful, and I have been using it when I'm giving feedback to my team about Inside.com. Instead of me having to write down, I want you to do this, this, and this, I show them. This ability to communicate in real time, straight from your browser, with no download, no app required, and one-click sharing is amazing. This product is super elegant, and it's perfect for code reviews, Q&A, strategy walkthroughs, and basically faster decision-making. No more useless meetings, just use Bubbles. Bubbles was built for remote workers, by remote workers, and that's why it is so flawless. In a recent survey, 90% of surveyed users said Bubbles helps them make better decisions. So visit usebubbles.com/twist to start using it. That's it. It's free to start using. Just head to usebubbles.com/twist and send me your product demo. What do you got to lose? Maybe I'll invest. There are some people who are a level of charisma that is just preternatural. Like you meet them and it's just like, when I met, I told you the story. You can leave this in the show. I was helped Hillary when she ran for Senate in New York. And as a thank you, they invited me to a dinner. I didn't have to pay or anything. Just like this, maybe 50 people, 100 people at this beautiful loft. And I come to the elevator and they take my phones. I had 2 phones on me and they were like, Secret Service, like, why do you have 2 phones? I'm like, and they put me in a different line. And I'm like, well, this is my international one. And this is for girlfriends, and then this is for the other girlfriend. And I made a joke, and the guy's like, come over here. And he literally takes my phones apart. He didn't like the joke. And I was like, no, this is literally for when I internationally travel, and this is for domestic travel. This is a GSM phone. This is a CMDA phone, whatever. Anyway, long story short, they put me in the elevator. I get to the top of the elevator, Rachel. The doors open, and I kid you not, 7 feet in the elevator is Bill Clinton staring me in the eyes. And just Bill Clinton. And he goes, Jason Calacanis, I just want to let you know how much it means to me and our family, Chelsea and Hillary, that you supported her run. And this victory is as much yours as it is ours. And we're going to do great things for the state of New York. And I was just like, whoa. And then I just leaned in and I kissed him. No, I didn't. But I felt so in love with Bill Clinton at that moment. and then I realized what happened, because then I go in, I walk into the party, I look behind me because I'm like, well, that was interesting. And he's still standing there. And somebody comes out, whispers in his ear, and they disappear off to the side. Literally, they're telling him who's coming up the elevator, the name of the person, what they did, so they could greet them. I was like, this is the most next level power move I've ever seen.
What did you call it? The one hotel that you love, it's like that level. Amon level.
All right, everybody. So Rachel has been doing a great job. She's been with me for a year now. Is that right? You had your 1 year anniversary. Oh, I'm so proud of you.
I did. Had my 1 year anniversary.
And listen, you went from doing your own pod, which was a solid 7 out of 10. I told you when I hired you, but you had no resources. And now here you are. You're doing this segment every Friday. May I ask? In the New York City, in my old haunting ground, do you get recognized? Do people know you? Are you starting to become a little micro famous in the tech circles? People know what you do yet? Anybody recognize you?
A little. So I actually try not to say too much. If they don't know what I do, I try not to tell anybody, because we don't take pitches on the show. So I never want people asking like, oh, can I be on it? Because I don't know, I feel like that's something that we've done really well on the show.
You should totally tell people what you do. Of course, you're representative of the show. You're on air, but it is true that you should.
Weird about it sometimes. So I'm like, you're just trying to.
No, it's fine to get the pitch. What you say to them is, I don't actually. What you should say to them is, if I pitch you to be on the show to the editorial group, your chances go down if I know you.
Yeah.
So you actually just want to earn it, and so if you just keep me informed of when you do great things in the world. What we do is we share really interesting products or services or funding rounds, and then we work backwards to, is this an interesting person to have on the show? We don't use relationships to have people on the show. We use what people do in the world, which is the truth, right?
Yeah, it is. Yeah, 100%.
I have my friends all the time ask me, oh, can I come on the show? And I'm like, what have you built? And they're like, well, I want to talk about this and this. I'm like, what have you built? What are you working on? Like, tell me what you're working on, and then we can have that conversation, right?
Mm-hmm. Yeah, right. And I think that's something I'll have to start stepping up then. But it's definitely been, I was actually thinking about this with everybody talking about working remote and stuff. I feel like living in New York City, I moved here in January. This has helped my career way more than being a full-time remote employee and not living in a target city. Because now with a lot of the OK Boomer guests and other people with startups, I try to do our pre-interview calls in person, whether that be like a 30-minute coffee chat before the workday starts, or just hopping on a Zoom. And being based in New York City, like this week's guest, Marcus Milione, he's a New York-based founder of a brand called Minted. And I was able to get coffee with him before he came on the podcast.
What does Minted do?
So Marcus has his brand called Minted. It's actually like a dual-sided thing. There's Minted Health and Minted New York. Minted Health makes stuff like pre-workout. If you go and you check him out on TikTok and things like that, you can see he is obviously really into working out and running long distance. And Minted New York is where he makes clothing. Mostly it's men's clothing, but I did hear that there might be some women's clothing coming out in the future.
Oh, very cool.
Yeah, so I was able to talk to him about how he's been able to grow his company through his own personal brand on TikTok. And unlike our other OK Boomer guests, I've really been trying to focus a lot on people that are putting themselves out there, especially online, because I think that's a big thing now, especially with founders. But unlike Nate O'Brien or Natalie, he actually didn't have that big of a personal brand before starting his company. So it's been really cool to see his brand kind of blow up on TikTok, and we were able to talk about all things Minted.
Well, if you think about it, if you can master an organic channel like TikTok, YouTube, email, Twitter, whatever it is that you're great at, it could be Quora, it could be Reddit. If you can master one of those channels to get attention and build your brand, then when you do launch your, pre-workout drink, you're going to start on second base, right? And you may get those first 100 or first 500 customers, and those are in fact the hardest ones to get. This is why being of action, we talked about on the blueprint, you want to have a bias towards action. Seems like a lot of the guests you're having, especially the social media folks, they're of action. They're doing things. They're making stuff every day. And it's very easy to dismiss them. Oh, you're just taking pictures of yourself working out, or, in some fancy clothes, or, at some FOMO event. But if 1,000 people like it, I told you the story of meeting the super influencer who's an actress. I think she has her own weed brand now. Bella
Thorne.
Bella Thorne.
Yeah.
Bella Thorne is like, I am completely obsessed with her fan base.
Yeah.
I'm like, who are these people who are following everything she does and she wants to be a mogul? Like,
yeah. She was actually a Disney star before she was like an influencer.
Incredible.
Is that crazy?
Yeah.
She's done everything. She's definitely a powerhouse. And I think it's also like consumers now don't just want to see like a pretty Instagram page. They actually want to see like community behind it. So with these creators, and obviously like you've killed it with that. Like we always get to hear about your experience like prior to the twist that I know today about how much, especially pre-pandemic, I guess, how there were all these events and things happening and how that really helped like distill like your first base of community. And now,
I forgot about that.
Yeah. With the help of the internet, I feel like it's only getting bigger.
It's really interesting how many people got their start on, I didn't realize Ryan Gosling was a Disney star, Hayden Panettiere, Britney Spears, Lindsay Lohan, obviously, Kristen Stewart, Misha Barton, Zac Efron. I met him actually at the same party. At the same party with Bella Thorne. I met Zac Efron for the second or third time. He's friends with a friend of mine. Very
That's
cool.
That's awesome.
Fergie, Selena Gomez, Zendaya. I knew Zendaya. It's incredible. And I think when the issue, I think, is with a lot of these folks is they don't have an actual community. They have fame, but what does their fame, how does it manifest into a community, I guess, is the issue. What I'm seeing based on your reporting, Rachel, is, and we should keep pulling the string and see if we can understand it and then maybe see if there's a business opportunity here for us, is who can become like Mr. Beast or Kim Kardashian, where once they hit some amount of scale, they can manifest it in a product, right? And their audience stands for something. Like, what does Mr. Beast's audience stand for? Having fun? Like, it's kind of goofy and fun, but it's also challenges. Like, he has to actually manifest it into something, right? And so chocolate bars, if it's kids like candy. So, okay, great, product alignment. But if Bella Thorne's fans are into cannabis, great. That's legit. But if
my dream OK Boomer guest kills it at this. Emma Chamberlain. Anybody has a connect, that will be my dream OK Boomer guest. But
Who?
She was Emma Chamberlain. She founded Chamberlain Coffee because that was a big thing that she used to do in her YouTube videos back in the day. Now she does things like she's the face of Louis Vuitton. She's one of those influencers. I feel like there's like a level of influencer where I feel like you hit celebrity
Does she
status.
have a specific talent other than making coffee?
Her videos now are just really well edited, and she's known for editing her newer videos, and she has a really good view at that. She's like a
Casey
Neistat. Yeah,
he's a Casey Neistat?
Super duper similar to that, like going from like being an influencer to celebrity, like common celebrity, I feel like status. She was wonderful at bringing her influence in her community and, pioneering and pivoting off and creating a brand off of it. And she doesn't even post that much anymore on YouTube, but I know her coffee brand does incredible.
That's really interesting. So somebody who knows Emma Chamberlain.
Emma Chamberlain. Yeah. She's it.
School dropout. She did online videos. Fascinating. Emma Chamberlain, 18, is the funniest person on YouTube. What does she do? So far, the content of her videos has not been the point. She makes cupcakes or tries her hand at sewing. Like Phoebe Waller-Bridge of Fleabag, that's a great show, an artist close to twice her age, she interrupts the proceedings constantly to speak to her audience. That's where her videos actually happened. Cool. I'm going to have to check her out. So she was a just videographer, basically, right? Doing that like vlogging. We used to call it vlogging. Yeah. So
she was like one of the first big vloggers in the lifestyle space before. I feel like she's actually... There's another girl named Victoria Paris that I think will probably be the new face of like being one of the first influencers that kind of pioneered TikTok. I think Emma Chamberlain was one of the first to pioneer like the lifestyle vlogging of YouTube.
Fascinating. Well, this is the thing. It has to manifest itself in something. So you can get attention for making these. But yeah, if she's like really into coffee or I do J trading, or eventually you find something that specifically you like, photography or something, you can really start to make that into, you can productize it, right? I always thought Casey Neistat should come up with his own video equipment or line, right? Like that would be amazing if he had his own, camera bags and lenses or whatever that he made, or, gimbals or whatever. Or a school, if he had a school for teaching people how to make videos, like can you imagine? We would be the first people to hire from there. We're like, yeah, he's teaching techniques. Amazing. And the one thing I'd like to put you on assignment for is the video structure of winning TikToks and YouTube videos. Somebody broke down, and I had seen this, I think I saw a TikTok about a Mr. Beast video, and they said, and I had talked to Jimmy, Mr. Beast, about this, how much effort they put into editing a video. He said they can spend like weeks on one video.
Wow.
That is just a couple of minutes long, and that they sometimes have like 40 different video techniques in the first 15 seconds or 20 seconds of things happening in the video that make it impossible for you to look away. Whether it's characters being drawn or a filter or a cut, it's like supposedly a level of insanity and detail that you don't even notice. It's like almost subliminal.
Yeah.
How much the video is changing to keep you from scrolling past it.
Yeah.
So that is...
It's crazy because don't you remember, wasn't there like you're supposed to stay on a shot for 3 seconds minimum? Like if you take a video class, like an entry-level video class, there's like, oh, stay on this one shot so people like, can actually see what's happening before trading off. And now you're starting to see the Mr. Beast content of it feels like different shots every split second.
A lot of this now, I think, has to do with also people's propensity to pause or change the speed of videos. So this has also dramatically changed video consumption patterns, I believe. People are now doing all these videos where it's kind of required to time the pause to see like the outfit change or the, whatever, they're going to do some flash of something. And then, if you listen to podcasts, obviously speeding it up or slowing it down, or when you're watching a trailer for the new Marvel film, they're putting Easter eggs deep in these, and they're cutting them so fast that slowing it down and putting it at 0.25, 0.5 speed lets you say, oh yeah, that's Captain America's shield in the background, or that's, this Star Wars character from Rogue One. But it's going by so fast that literally I watch some of these Star Wars maniacs who have YouTube streams live, and they'll watch the trailer for something like Andor that just came out, and they sit there and they hold the scrubber and they move the scrubber one at a time to look at each frame and then pause it. Oh, see this? That's what this is. And they were like trying to, this lightsaber, is this person's a lightsaber, or the hilt of this one is probably this Sith Lord, and the color, it's pretty crazy. So anyway, I want you on assignment for explaining to us video editing for, Mr. Beast and some of these other, great TikTokers that are doing a fast thing and how they do that. All right.
Definitely.
So I'm looking forward to hearing your latest. Okay, Boomer, Let's go.
Okay, Boomer.
I understood the assignment.
Thank you so much, Marcus Milione, for coming on today's segment of Okay, Boomer. You're a New York-based founder of the brand Minted, and I found you actually over on TikTok, which was really cool from your running content. But that's not the only content that you're putting out there. You are also posting a lot of content about Minted. So thank you again for coming.
Of course. Thank you for having me on. It is a pleasure.
Awesome. So I guess the first question is there's two sides to Minted. Can you please explain what Minted is and what the brand kind of does for the community?
Yeah. So I guess I can't really talk about anything Minted without talking about a bit of my social media. Started around beginning of quarantine lockdown at the beginning of COVID, and started to use social media kind of as a creative outlet. I was working in finance at the time and stuck at home with my parents. And as much as I love my whole family and my parents, I needed some way to like get the creative juice flowing. So just started to post around things that I enjoy very much, like fashion and fitness type content. And then the brand was kind of born out of people wanting certain things that either I was wearing, or it started with jewelry and then it moved into apparel, and then just being infinitely curious. I had always been using kind of supplements on the sports side of things just because I spend a lot of time either in the gym or running, certainly running right now. And so I started to figure out how to make sports nutritional supplements. And so both of Minted Health and Minted New York were kind of just spawned out of my love for fashion and fitness and my curiosity trying to figure out how things work or how things are made, I guess would be the summary.
I love that. That's really cool. And from what I know you were actually doing a full-time job. That was a remote job, but you were doing a full-time job while you first started Minted. How did you know to take the leap, and like how long was that crossover period while you were founding this company and working a 9 to 5?
I would spend my mornings and nights mainly building Minted New York at first. Minted Health hadn't started. On top of all of this, of like creating content and building the brand, I was, you still want to perform highly at your job. You don't want any of that to slip, and you don't want there really to be any overlap. It took about 8 months of us doing Minted New York full time before I felt that I could, not full time, but like working full time and doing Minted New York. Then I felt I could jump and make the leap finally after I set myself like a little revenue goal. If we do X number of revenue over 3 months, then I can quit. Ended up doing that whole entire 3 months worth of revenue in a day. And I put in my 2 weeks like 3 days later after I got caught up on all the orders.
That's awesome. So you have always been really interested in business. I know that because we were able to grab a coffee right before chatting for this interview, which I absolutely love doing. So I've actually got to meet Marcus IRL, which was awesome. But you told me that you've always been really interested in business. So where do you think this side of your love for business came from, and how do you think your passion for business prepped you to become a really good founder?
I think you can be quite good if you just are curious about a lot of things, right? Because, there really is no roadmap on do this, and then, you'll see success over X period of time, right? It's more like try to figure out how things work, and you're going to run into 1,000,001 roadblocks along the way. But it's like, get on Google, start trying to figure out how either businesses or people before you dealt with that, or figure out ways that it's been, figure out ways that it can be taken care of. And I think, it's just that curiosity. I remember growing up, you'd look at, I always had a thing for like service-based businesses. I don't know why, but I always was interested in that whole entire model and how they worked. And it's very much like your business is almost as good as your people, especially when you have service-based people, client-facing. And so I think that's kind of where my customer comes first, always mentality comes from. And I always try to teach Sean, who is my younger brother, who is working with us, as well as Clay, who is is one of our designers. And it's just like, listen, people are working to make money, and they're choosing your business to spend money at. So take care of them. Like I feel a visceral obligation to do my best to make sure everything is right on their end, regardless of, maybe we got to take a hit of like sending refunds or replacing product. It just is what it is. That's business.
Yeah, that definitely makes sense. You are also a giant reader. I know I've asked you for like your Audible recommendations and what you're reading. Is there any book in particular that really stuck with you that has been about business?
Kind of cliche. I feel like they're on everybody's list. Lean Startup is extremely good. There's also 0 to 1. Yeah, I think those are probably my two favorites. I'm like glancing over here because I have them stacked on my desk. Yeah, as far as like strictly business goes, those two are probably my favorite. I have the E-Myth Revisited on my list. I know that's like the holy grail for a lot of people. I'll get to that this year at some point.
Yeah, no, my reading list honestly is like so freaking long, especially this summer. I feel like everybody in the past 2 years, probably because of the pandemic, has just been ripping through books, and I've gotten so many good book recommendations out of it. But now my to read list is getting a lot longer than my has read list this summer, to be honest with you. But yeah, I've always heard but Lean Startup obviously has made a huge impact on a ton of people. So that's really awesome that you were able to check that out. And you're an extremely hard worker. Obviously working those two jobs at the same time must have just been not super duper fun. And something that I notice a lot is the difference in which kind of being a founder and working for yourself presents itself differently on different platforms. So on TikTok, I see a lot of people glorifying the life of founders and working for yourself. Whereas on Twitter, I kind of see this more like Gary V-esque kind of energy where people are talking about hustle culture. and how like you won't get anywhere if you don't like grind, like work hard. Which side of business do you think is more accurate to being a founder in your case?
You know, I think it's a balance, right? I think that with social media, you run into the issue of people glamorizing being a founder or being kind of just an entrepreneur in general. Like spend any time on any of the social medias and you'll see it's like always people selling courses and they have the Lamborghinis and like they're going out to like the clubs and all of that stuff. And they're essentially just selling you on a lifestyle, which like, I think if you're young and impressionable can be convoluted because then you associate that with just being an entrepreneur, working for yourself. It is what it like work hard, play hard type, like that whole thing. Whenever I make videos about, especially like day in the life videos are pretty common, especially on TikTok. And it's like, I'm behind my computer for a lot of hours on the day, right? Like I get up early. I have to deal with manufacturers overseas. You know, I have manufacturers on Thailand, like on the Thailand time zone. And, you're just always dealing with something. And I think like, while you can certainly enjoy it, when you're a founder, especially when you have people on payroll, you're now responsible for their livelihoods, right? So you have this burden that you can't really ever shake. And so I think that sometimes founders can run into the issue of trying to escape through not the healthiest means. And ultimately they end up run down and then like work performance suffers, all of that. And they're just, you know, so I just try to give an accurate representation. I don't have a Lamborghini, you know, business is extremely strong, but at the same time, you just have to keep building. You can't ever think that you've arrived, right? You always have to kind of keep climbing and climbing. So I guess it's a mix of like hustling all the time and trying to enjoy what you've built. But at the same time, like, it's I would not say glamorous.
Yeah. Why do you think that you're so geared into business? Like you seem like you're an absolute, just for lack of a better term, beast in this space. So when you say you wake up early, you're not just talking about like the regular 6 a.m. early. Like when we first started talking and about this recording, I was like, yeah, like feel free to schedule in the morning. I wake up fairly early. Myself thinking 6:30 was early. And you're like, yeah, me too. And then as the conversation kept moving on, I realized that your early meant 4 a.m., right? So you're waking up at 4 a.m., you're dealing with people in Thailand, you're still able to keep like a stellar workout routine and you're running a business. Where do you think this like strong, first off, I guess, phenomenal time blocking, where do you think this phenomenal time blocking is coming from? And also like, where are you getting this energy to keep going?
Yeah, I think it's probably twofold, right? Like I have extremely hardworking parents. My dad is the one who kind of I watched growing up get up extremely early. To this day, he wakes up around 3:45. So he starts early. And then I think it's kind of like as you get older, you figure out when am I going to do my best work, right? Like there are people that work best at night. So that's kind of how they tailor their routine for them. For me, most creative and, in my flow state when everybody else is asleep and like the world hasn't really woken up. And I love that time. Emails aren't pouring in, it's like there's no fire drills. I can just like bang out work. And then I think the other side of that coin is like, I don't even know if it's good to admit, but like there's this crippling fear of like, are you going to ever reach your potential? Like, where is the ceiling? Right. And yeah. I think you can see it manifest in the way I've approached running and just kind of like slowly like checking off boxes of, okay, we do this fast, like what's next? And it's like, okay, let's just push it until we either break or we break through. And so it's like this weird dynamic and it's all inside of my head. Right. But, that kind of just like lights the fire. It's just like, I almost view it as a game within myself.
Yeah.
I don't know.
I get that. It's like gamifying your life, which I've actually seen a really good productivity video on that. I'm a productivity junkie. I'm not sure if you are, but I'm definitely one of those people that is constantly, like, a bunch of the books I read are self-help books. A bunch of the videos I watch are also about like optimizing my time, because obviously it's the one thing you can't get back. So the same way that like finance is really interesting to me because it's like a finite resource in like the case where I grew up, like in college, like I had a minimum wage job. So money wasn't something that like was flowing in. Your time is something that also feels right now at this point in my life, something that I kind of have to structure a lot more than other people because I do work West Coast hours. So I wake up really early because the morning, I'm again happy you said the flow state even, because that's again, I mean, that's also where I feel the most, I don't know necessarily creative, but definitely the most driven and inspired is early in the morning. So that's when I get things like my grocery shopping done. And that's also when I get things done like personal projects. If I want to start writing a lot more, if I know we're going to be having like a taping later in the day that I have to write notes for, I'd rather sit that down, get that knocked out really early in the morning when I have no distractions and I'm 100% on, like my coffee first hits and I'm good to go, than a little bit later in the day where I'm kind of feeling dragged on. And the video, by the way, that I'm talking about that talks about gamifying your life, I believe is by this YouTuber that goes by Better Ideas. And I would highly recommend anybody checking him out. Better Ideas is a wicked, awesome account. I really, really like a lot of his content. And most of it's about productivity. Some of it is about like how he battled social anxiety and things like that. But that was the first place where I ever kind of heard about kind of treating your life like a video game and just learning to level up. And do you have any advice to people listening, especially people that are young and want to become founders, on how they can level up?
I think it's hard, right? Like, because if you are just starting out, you're kind of looking for either answers or maybe someone to tell you what to do specifically. And the way I've always looked at it is like, if you break out your days into blocks, right? Like, or bricks, and like you just slowly work toward your end goal, whatever that may be. And you'll find that when you get there, ultimately the goalpost is just going to move a little bit further away, but you just keep continually stacking bricks. You know, after a while, you're standing on this extremely sturdy foundation of positive days, right? So you might get knocked back a couple days, like, you know, stuff happens and that's just part of life, but you still have your foundation built up. And as long as you maintain a healthy routine, just give yourself the most amount of chances to make the right decisions and either have enough time after you do make a mistake to rectify it, or, you know, just like keep plowing forward. And yeah, I think a lot of people get hung up on the analysis paralysis type deal. Just start, right? Start, fall on your face, get up, dust yourself off, like keep going and start again. You know, like why not? Don't really fear failure. Don't feel any sort of maybe insecurity about other people looking at what you're doing. Like in the beginning, when you start anything, everyone's always just going to call it, oh, your like little project, until it actually goes somewhere. And then they're like, oh, like, you're doing something. Don't worry about it, you know?
Yeah. Keeping on blinders is obviously really, really difficult, especially when it feels like a lot of the times your whole life is almost on I feel like nowadays, I feel like a lot of founders, especially the ones I guess that I've been speaking to lately, have been putting their lives on blast, right? So your life, whether that be like what you're doing outside of work along with your job, those are both posted on TikTok. How were you able to kind of like keep those blinders on and really focus in on what you're doing and being like, okay, I don't care what like people from college are saying about my TikTok account, like I'm doing me right now. Like how do you focus in on that and kind of drown out that noise?
I think it's easier if you're making content that's just true to who you are, right? As soon as you start to try to fake a personality or, you know, fake being something that you're not, then either people that actually know you, it becomes like awkward if they know about your stuff. And like, so I always went into it of, if I end up ever meeting people that watch my content, I want them to just be like, this is exactly how he is online, right? So it was always just like, stay true to what you do and what you enjoy, and don't get caught up in thinking you're something you're not. Just, you know, head down, focus on your work, and I don't know, just don't do it to the point where you lose the creative spark. But make sure that like you're putting effort or providing value in anything that you are doing.
Yeah. And it's been really interesting to see your online presence grow along with your business, because when you first started Minted, you said you had around 40,000 followers, I believe, on TikTok. Like, what's that number now? And I would like, after you say that number, can you tell us a little bit more about the importance of personal brand?
Yeah. So we're a bit over 300,000 now. And as far as personal brands go, I know that we had probably pretty much just going to say what I said at coffee, because I think it's really important, right? Like companies now, and I think this is a bit of like archaic thinking, where you have these corporations that they don't really want you to build a personal brand outside of work for probably fear of losing, top talent. And I think that the companies that succeed in the future are going to encourage people to build personal brands outside of work. Not only that, but like if you have a big personal brand outside of work and you are attached to whatever company you are working at, it reflects well on the company. I mean, I guess if your personal brand's like decent and not like you haven't totally trashed it, but it reflects well on the company. And like the company I used yesterday, Triple Whale, they're an analytics platform. They're doing insanely good stuff, but I know their entire marketing department, and the way that they encourage their whole team to build personal brands outside of, working at Triple Whale, it's been incredible to see. And I think that's kind of the way forward for a lot of companies, especially now, like as a lot of stuff has shifted to work from home and, you're not just like stuck in the office all the time. Like people have lives outside of work. That's how it is. And that's how it should be. So they should be able to build personal brands and around the things they enjoy.
Yeah. And my boss has been very open. He actually spoke recently. Jason, along with Molly, also touched on this. So Molly is the most recent host to come on This Week in Startups. And obviously she had a very strong personal brand previously. She killed it at NPR, killed it at Marketplace, NPR Hall of Fame. Like this woman is a beast. So she had a personal brand coming into This Week in Startups, which has definitely helped our show because she carries that along with her. And Jason also has added that he supports people who work on his show to have their own personal brand. He's very okay with me having, like tweeting. Like I let my bosses like follow me on Twitter, which might be like a little bit different than most people, and being like tweeting about my job and having my bosses interact with it. Obviously, I'm not out here saying like, oh man, like my bosses suck and I hate it here. But like my bosses definitely can see into like that portion of my life. And I think it's really interesting because obviously having a personal brand in this kind of field is helpful. And at the same time, I think kids or people that are Gen Z that are feeling like, oh man, like I wish I could like have more of a personal brand, but like my bosses won't let me. I also think that they should take into consideration that I'm not seeing a lot of people create like this barrier between their life and their social media presence. And as good as having a personal brand is, I'm always nervous about like pioneering and maybe going off a little bit more on social media and trying to cultivate the personal brand idea more, because I like having like that separation. What advice do you have on people, for people that want to build their personal brand, but also keep their life to themselves?
Yeah, I mean, it's kind of, there's a dichotomy there, right? Because if you want a personal brand that's pretty public, you have to be willing to share stuff publicly. I think that when you start to post on social media, you lose a bit of your, maybe not your right, but you lose a bit of your kind of sense of separation. And that's just all part of it, right? Like you don't build up a community by being super closed off. Like people know about what you're doing or like things you're going through or what you're working on. Or, if you're building up a community and you're known as someone that's really, really smart in a certain field and you're tweeting out all of this important stuff, I think maybe that's probably a bit easier to keep it separate because it's almost like you're not just a lifestyle type creator, and you're more just like, information based. But I think it also depends on the medium. Like you could be putting out newsletters, right? Super detailed, like crazy good newsletters. That's a much different connection than if you're lifestyle vlogging on YouTube or TikTok. So maybe pick your platform and see, what is it that you really want to get out of it? Do you want to be vlogging your life, or do you want to be just writing articles on a newsletter?
Where can people find Minted, and when do you guys expect like your next place or the next time people can actually order clothes from you?
So all things apparel is mintednewyork.com. Everything else from the health side is minted.health. And so we have a huge collection of athletic apparel. I just actually got the top samples, which is the stuff they pull off the production line, came in yesterday. That is going to be, it's being loaded into a cargo container right now, and then probably release around the beginning of September.
Nice.
Granted, I don't know, we got to get it, unpack it, get the warehouse ready to
supply
ship
chain.
everything. Yeah, there's a million places where all of that can go wrong.
Will the athletic stuff then though be with the health side, or will that be with New York because it's still clothing?
That's Minted New York.
Okay.
Yeah. So outside of that, we have trousers that were made here in New York City, 3 different colorways, also releasing. I don't know when, probably beginning of August. The thing is, like, I think a lot of people expect us to follow the normal fashion calendar, fall, winter, spring, summer, that type deal. We just release as we get it, because I feel like always playing catch up. Like I'm just constantly spinning my wheels trying to get my feet under me, and then we release and it's like, all right, well, we'll just like do it again.
Yeah. Really cool that you had the trousers made in New York too. We had a previous person come on the podcast named Eric Button, and he has a fintech company called The Contrast debit card, I believe. And if you have the debit card, it gives you cash back when you buy made in America products. So if people are interested in checking out Marcus's pants, also check out the Contrast debit card. I can absolutely just plug that. So that works awesome. And then also, where can people find you?
I am across pretty much every social media platform. Instagram, I think it's Marcus_Milione. TikTok is just Marcus Milione. Twitter, Marcus_Milione. I don't even know my own handles. Yeah. And then in any of those profiles, there's the whole link in bio thing, which has a ton of links to my other stuff. Minted New York, Minted Health, the Minted Minutes newsletter, everything you could possibly want.
Amazing. So by the way, everybody, you spell his last name, because I had problems pronouncing it, Milione. Thank you so much, Marcus, for coming on this segment. Super excited to see when you guys drop your next line of clothing.
Yeah, it was a pleasure. Thank you for having me on. It was a good time.
Okay, everybody, thanks for listening. Tune in Sunday when Molly and I are going to do an amazing VC Sunday School and another This Week in Climate startup interview. Enjoy your Saturday off. I know I sure will. And we'll see you on Sunday. Bye-bye.